Welcome back to my channel once again. Today we are going to be sharing another weekly analysis of my trading journey. Last weekend I shared with you my trading journey and analysis last week, and like I promised you, this week I'm going to share with you my trading analysis on what happened throughout the week. So I'm going to be sincere to you. Forex trading is all about money management. Like I said, there is no perfect trading strategy. So in all my videos, I have been saying this all the time. Money management still remains the key to success in forex trading. So make sure you risk at least 1% or 2% of your trading capital, so that it will take you at least 100 times or 50 times before you lose your account. Why am I saying this? The reason why I'm saying this is because even if you have the best trading strategy, it can still go wrong. Why? Because of fundamental. There might be news along the way and you might not know. So if you go 100% with the mindset that you have the best setup, news can affect your setup and you might end up in a loss. So the earlier the better. It is better for you to know this instead of you crying, because I know so many people who have lost their trading account. They have lost so much capital because of lack of money management. So like I said, money management still remains the key. So if you have been following me, like I said, I trade gold, SAUSD, and my only trading strategy is the moving average. Sometimes I combine two moving average and wait for crossover, and sometimes I use only one moving average. So how I trade is, whenever price crosses above the moving average, close above it, I take a buy trade. So I will only buy until there is another crossover, and when price crosses below the moving average and closes below the moving average, I take a sell trade. I only sell until there is another crossover. So what I mean is this: whenever price is above the 20 exponential moving average, I only look to buy, right? So where do I look to buy? I wait for the price to make a pullback to the 20 EMA for me to place my buy trade. And if the price is below the 20 EMA, I only look to sell. And where do I sell? I wait for price to make a pullback to the 20 EMA for me to place my sell trade. So in this scenario, the 20 EMA will be acting as a dynamic support and resistance level for me, especially when the market is trending. But if the market is ranging, I can include other technical analysis like the horizontal support and resistance, right? I can use a horizontal line to map out support and resistance level. So I use this as my trading strategy, and this strategy has been profitable for me. So if you watch on the chart, you see that the market has been bullish. And like I said, gold has been trending, right? So if you watch, you see that gold has been trending up since yesterday. Gold has been trending. So what I am doing is I wait for price to make a crossover, and whenever price makes a crossover, I take a buy trade. So now if you look at this chart very well, this is gold, SAUSD, and this is 15-minute time frame. You see that the price has been in an uptrend, right? The price has been in an uptrend. On Thursday, there was a massive bullish trend, right? Gold was in a massive bullish trend on Thursday, right? And that was the day that I made the highest money. So I waited for a crossover for me to place my trade, and this is where the crossover happened, right? So when the crossover happened, I placed a buy trade, and the price went against me and then went up, went against me again, and then continue heading up. So that is why it is advisable that your stop loss should be a little bit far away from the moving average, because sometimes price can break below the moving average and end up in a wick. And if your stop loss is very close to the moving average, price may trigger your stop loss, and once you are stop out, then price can continue heading to your intended direction. So that is why I always make sure that my stop loss is a little bit far away from the moving average, so that it doesn't get triggered easily, right? So for the fact that the market is bullish, right, I normally do my technical analysis to make sure that I'm trading in the direction of the trend. So if you go to the 1 hour time frame, you see that the market is bullish, right? The market is bullish. Higher high and higher low, higher high and higher low, higher high and higher low, higher high and higher low. So the 1 hour time frame has already confirmed to me that the market is bullish. So I'm only looking to buy and not to sell. So if I come down to the 15-minute time frame, I will be looking to buy because the market is bullish, right? So whenever a price crosses above the moving average, I place a buy trade, right? And whenever price crosses above the moving average, I place a buy trade. So I temporarily ignore the cross below for sell. I only focus on buy, because even if I place a sell trade, I know that the price cannot go far, right? It's just a retracement. The price can just go like 20 or 30 pips and then the main trend continue. So that is why I don't stress myself placing a sell trade, right? So if you watch clearly, you see that on Thursday there was a massive bullish trend, right? So had it been you place a buy trade at this crossover, let's assume that you place a buy trade after this crossover, then imagine how many pips you would have accumulated, right? So from 23.39 to 23.98, that is over 700 pips, right? If you that is over 600 pips from 23 to 98. That is over from 38 to 98. All right, so let's assume you were able to cash this crossover, right? And then your stop loss was somewhere here, right? So let's say your stop loss was somewhere here, or even if your stop loss is very close to the price, because like I said, money management still remains the key. Even if your stop loss is very close to the price, right? Let's assume that you caught this crossover and you place a buy trade and the price reversed and hit your stop loss. Then you caught another crossover, the price went up and came back. So what I normally do is this: I place two trades. One, I have a fixed take profit, which is 40 pips. While the second one, I don't have a fixed take profit. I allow it to trend. So now, if a crossover happens, right, I will first and foremost wait to see whether if my first take profit will be achieved. And if price eventually goes down and hits my stop loss, I will accept the loss, because my stop loss is always tight because of my money management strategy. So normally I always risk 20 pips in my trade. So I have the mindset that if I risk 20 pips and target 200 or 300 pips, I have the potential of making more money. Even if I lose 5 times, one trade alone can recover all my losses. So that is the mindset I have. So now, if the price goes a little bit, comes down and hits my stop loss, right, I will accept my loss and I'll wait to know whether if another crossover will happen. And eventually another crossover happen, and then I place my buy trade here. So this is where I place my buy trade, and the same 40 pips, right, the same 20 pips. So this is my stop loss, and the price went up and my first take profit was triggered, which is 40 pips. So once I confirm that my first take profit has been triggered, I immediately break even. So I take my stop loss to my entry. So if the price now comes back it will hit my break even. So in this trade there was no loss for me, but in this trade I lost because the price couldn't hit my take profit, rather it reversed and hit my stop loss. So here I was able to lose just $20, and here I made 40 pips, which means I was able to recover what I lost here, and then the price broke even, right? So when the price broke even, I waited again to see whether if there will be another bullish crossover, and this is what happened. The price crossed above the 20 EMA again. So this is where the crossover happened, right? This is where the crossover happened, and I immediately placed a buy trade, and then my stop loss was the same 20 pips, because I don't risk more than 20 pips. So 41, my stop loss was the same 20 pips, right? So this is where my stop loss was, right? And then my first take profit was 40 pips, somewhere here, 48. All right, so this was my first take profit, and like I said, whenever my first take profit is achieved, I always break even. So this is where my first take profit was achieved, and I broke even. I took my stop loss to my entry, right? I took my stop loss to my entry, right? So this is what I did. So now that I have gotten my first take profit, my stop loss is now at break even. So what I'll do is I hold on to my second trade. So now imagine I place my buy trade here after this crossover, right? And the first trade triggered my take profit, which is 40 pips, which is $40, and after that I had to hold onto my trade, waiting for crossover, because I only close my trade when price crosses below and closes below the 20 EMA. So if you watch since Thursday, the price was heading up far away from the 20 EMA, which confirms that the price was in a strong bullish move. So for the fact that the price has not crossed below the 20 EMA, I was still holding onto the price. So now I entered at 23.44, and this is where the price is at 23.90 something, yeah, 23.98. Even the price got to 23.400. So now if you do the calculation, this is gold, right? And you know that gold is always volatile. If you do the calculation, you see that from this 23.44 to this 23.98, if you do the calculation, you see that this is over 600 pips, right? This is over 600 pips, or 500 pips. This should be 500 pips plus, right? So imagine me risking 20 pips to make 500 pips. That is the beauty of using the moving average crossover. I know that sometimes I might be in a loss when the market is ranging, but what I'm waiting for is a strong move, a strong trend for me to be able to recover all my losses. And like I said, with this I was able to make over 500 pips, right? So that means I risk $20 to make $500. That is the best risk reward ratio anyone can think of. So risking 20 pips to make 500 pips still remains the best, right? So this is the analysis for this week. You can clearly see that the price has been bullish. Whenever a crossover happens, the price start going up, right? Whenever a crossover happens, the price start going up. So like I said, crossover has been one of my best trading strategy, and this is the strategy that I'm still using till date. And like I said, the best thing you can do for yourself is to minimize your risk small, so that you can be able to endure the drawdown. Because sometimes if the market is in a range, you may tend to lose so many trades, right? But once you respect your rules, your trading plan, there is always a chance that you are going to recover from your losses. Once you respect your risk management, no matter how many times you lose, even if you lose 5 times, 6 times, or even 10 times, have it at the back of your mind that just one trade alone can recover all your losses, as long as you are true to yourself, as long as you are respecting your trading plan. So like I said, This is the weekly analysis for this week. So for those of you that are still in doubt, you can go and do the backtesting in your demo account to see the power of the moving average, what the moving average can do. But like I said, the moving average should not be used blindly. You should combine it with technical analysis like support and resistance. Like here, you can clearly see that the market tend to be ranging here, right? That is why there were so many crossover here. So in my case, what I will do is I need to go to the higher time frame to know the directional movement of the market, which will not take me to the 1 hour time frame. Like if I plot something to indicate here, let's use a vertical line. All right, so this is where the market was ranging, right? So from here to here, this is where the market was ranging. So now I've used a vertical line to show you where the market was ranging if you want to avoid whipsaw. So what you simply do is you go to the higher time frame. So your main reason of going to the higher time frame is to know the directional movement of the higher time frame, so that you can only trade in the direction of the higher time frame. Now if you look at the higher time frame, you see that the market is bullish, the market is going up, right? So now you are looking to do what? To buy. So now you have identified that the market is bullish at the higher time frame, which is the 1 hour time frame. You can simply look for a horizontal line. You can use this one, connect the lows, and then use this one to connect the highs, right? So you have connected the highs and the lows. So you now go back to the lower time frame. Now you can clearly see that at the higher time frame you have connected the highs and the lows. So now you know fully well that this is the support level where price can get to and then reverse. So now you should be looking to buy from this spot. So you just ignore selling from here. You should only focus buying from here, because the major movement of the market is up move, that is bullish. So you should be looking to buy from this low. So what you have to do is you watch to see when the price make a down move. So when the price is in a down move, you just ignore and watch the price. When the price gets to this support level, you simply place a buy trade, right? Whenever price get to this support level, you place a buy trade, but don't place a sell trade at this level. Why? Because if the trend continue, your stop loss might be triggered, because the price can break above this resistance level. Because at the higher time frame, which is the 1 hour time frame, we have confirmed that the market is bullish. So you shouldn't sell when the market is bullish. You should only buy when the market is bullish. So when the price get to this low, this support level, you place a buy trade, right? And then you can take your profit here, your partial profit, right? Like I said, in this scenario, you shouldn't place just one trade. You can place multiple trades, like 3 or 4 trades. So when the price gets here, you close 2 trades and leave the other ones, right? Then when the price comes back, you enter again. When the price gets here, you close like 2 trades and leave another one. So the reason why you are leaving some trade is in case if there is a breakout, like just what happened here. So let's assume that you were buying from here. When the price gets here, you close your trade and you are leaving 2 trades in case if there's a breakout. So now luckily a breakout occur here. So for the fact that a breakout has occurred here, your remaining 2 trades can now go on with the trade. You can be able to use it to ride this trend. But had it been you didn't leave 2 trades in case of breakout, if this breakout happens, you might not be able to ride this trend, or you might place a buy trade here. But if you watch, you see that there's someone that placed a buy trade here and someone that placed a buy trade here cannot make the same profit, because the person that placed a buy trade here will make more than the person that placed a buy trade here. So this is how I trade using the moving average. I'm not just blindly trading the moving average, I'm combining it with support and resistance level. So my advice is you should try and have an account with TradingView, because with TradingView you can be able to analyze the market very well. After that, you can now go to your MT5 to place your trade. So this is how I trade this is how I trade, and I've been making profit consistently, right? So if you truly want to master forex trading, the best thing you can do is to look for a trading strategy and focus on it. So my strategy has been the moving average, and this has been one of my best trading strategy. So what I do is I combine it alongside with support and resistance level. So just this move alone made me over $5,000, right? This move made me over $5,000 because of what? Because the market moved over 500 pips, right? So I made so much on this move. So that is all I have for you in today's video. So make sure you backtest this strategy on a demo account and be consistent, because consistency still remains the key. Repeating your plan, your daily plan every day, making sure you are respecting your risk management and your money management. So once you backtest this in a demo account and you are 100% sure that it's working for you, then you can use it in your real account. So ladies and gentlemen, that is all I have for you in today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I will see you again in my next update. Enjoy the rest of your day. Bye.